Thanks for coming to our session. What does resilience look like? Stories from the Financial Diaries. So, resilience is a word that we often hear used in connection with vulnerable communities. Marcy, if you can stay on the first slide for a minute. But what does it really mean to be resilient? Is resilience an innate quality, or can it be nurtured or instilled? Is it a finite quantity, or does it grow to meet challenges? What does it look like in action? Today, we're bringing to you some real-life stories of resilience in the face of challenges from the Sri Lanka and Hrishipara Financial Diary projects. Next slide, please. So, hi everyone, I'm Shereel. I'm the head of impact at Gojo & Company, and I will be hosting the session today. Our speakers today are my colleague Marcelin Manoj, researcher at Gojo, and Stuart Rutherford, who, amongst many other things, is the founder and director of the Hrishipara Diaries project. Both of them will introduce themselves as we go along. Next slide, please. So this is our agenda for today. The main part of the presentation will be presentations from Mercy on stories from Sri Lanka and Hrishipara, and there will be a Q&A session at the end. So please do write any questions that you have for us to discuss in the chat box. Next slide. So before we go on, just a little bit about who Gojo is for anyone who doesn't know. Gojo & Company is a investor in financial institutions that serve low and middle income people in developing countries. Currently, we've invested in 14 countries across South and Southeast Asia, Central Asia, and Sub-Saharan Africa. And our mission is to extend financial inclusion across the world. Next slide. Okay, so a little bit on, just to introduce the Sri Lanka Financial Diaries. This was a project started by Gojo in 2021. It covers 9 areas in Sri Lanka for a total of 95 households. The Diaries project, as most financial diaries projects do, it focuses on capturing the daily cash flows of households. And Gojo, we did this at Gojo in partnership with a local research agency called Sparkwind Research. The project ran for just over 2 years. The methodology in this project was that we asked the diarists to self-record their transactions every day in notebooks, special notebooks with a specific format that we provided to them. And then we had an enumerator in each area who is just a local person, just one of the neighbors of the diarists, and they would visit the diarists on a weekly basis and take pictures of their notebooks. And they would then send these pictures to our chat group on WhatsApp, where the central team in Colombo would receive these pictures and digitize the data in a spreadsheet. And then the Gojo team would then receive this data in the spreadsheet and check and clean it in Tokyo. Now, a little bit just to introduce the Hrishipara Diaries next. The Hrishipara Diaries is in Bangladesh, and in contrast to the Sri Lanka Diaries, which focus on 9 different areas across Sri Lanka, the Hrishipara Diaries is concentrated only on one semi-urban village called Hrishipara, near the market town of Kapasia in Bangladesh. There are 60 households participating in the diaries, and as far as I know, this is the longest running financial diaries project in the world. It's been running for 10 years now. The data is collected by a team of local people from Hrishipara. Gojo has been connected with the Hrishipara Diaries for some time, as Stuart was previously an outside director on Gojo's board. But in 2023, Gojo officially became one of the co-sponsors of the Hrishipara Diaries project, and we've worked with Stuart on it since. Okay, now that I've introduced it, sorry, just one more slide on the methodology of the Hrishipara Diaries. Unlike in Sri Lanka, where the diarists self-record, in Hrishipara, the data collectors visit the diarists daily and record data in the notebooks that the data collectors keep. They then take it back to the diaries office, where the field manager column enters the data into the database on a daily basis. And this daily data is shared again every day with Stuart and Gojo in our Telegram chat group, and Stuart checks and cleans the data on a daily basis. So there's a very short turnaround time on the data in Hushipara Diaries. Okay, now I'm going to hand over to Mercy to say a little more about the Sri Lanka Diaries and how diarists in this project coped with challenges and uncertainties.
So, hello everyone. Greetings. I'm Merslin Manoj. I'm part of the impact team. I work with the Financial Diaries projects. I've been working with Cambodia and Sri Lanka Financial Diaries. So, today, before I begin to share, I want to provide some context on who are the people we worked with and geographically what happened in this region. So, we worked with roughly around 100 low income and very low income households. And these were mainly tea plantation workers, fishermen, farmers, and seasonal laborers. So 80% of these households relied on daily and weekly wages. And also in the last few years, geographically in Sri Lanka, the nation experienced a severe economic crisis in 2022 and 2023. And IMF came in and they are slowly reeling out now in 2024 and 2025. So, having said that, so let me share with you in our data analysis as we worked on this research, what are the key uncertainties or shocks that deeply impacted the households? Here are some key categories. Firstly, the business loss. So during the economic crisis, there was high inflation. The prices of food and essential commodities almost tripled. And we also saw acute fuel shortages, which made it impossible for many, such as vehicle owners and fishermen, to earn an income. So small businesses collapsed. For example, in the picture you see is one of her diarists. She and her husband made vehicle cushions for cars and bikes, which they had to close as the costs became unmanageable. Now the husband works in a small micro enterprise as a weekly wage earner. Another key category was death in the household. Losing the main breadwinner created both emotional and financial shocks. In addition to that, in Sri Lanka, there is huge social expectations to conduct funerals with exorbitant ceremonies like rituals, religious rituals, alms giving, and all these makes the households financially very vulnerable. And sometimes this pushes the families to borrow as well. So the diarist you see in the picture, she lost her father-in-law and her husband within a period of 1 year. So, two income earners of the household gone in quick succession. Another key category that we saw in our research is medical emergencies. So, basic health care is free in Sri Lanka, yet, emergencies like surgeries often require long waiting periods and significant out of pocket expenses. So, families use up their savings or they take loans or they even sell assets to cover up the costs. Also, prolonged illnesses, conditions like mental illness, disabilities in children, and the costs needed for rehabilitation all cost heavy financial strain. So, in the photograph is our diarist who went through an unexpected heart surgery. It completely depleted the household savings. Plus, there is income stagnation until he recovered and resumed work. And we see this pattern among many households. Another key category is climate risks. Whenever the heavy monsoon hits, there is landslide, and it is quite devastating for small scale farmers. And these farmers lack insurance as well. So, in the photo is a tea cultivation farmer. He's also unbanked. So, he shares that heavy rains usually greatly impacts both the crop yields and so his income. So these are some of our key categories that we saw in our research. But apart from these, we also saw fraudulent visa agents, migration scams, even marital issues that deeply ensnare the people in debt. So having said that, let me also give a consolidated view on how did the households adapt. or navigate these shocks. Firstly, some of the approaches they followed. Firstly, income diversification. About 46% of the total households had diverse income streams, such as running small shops, street vending, and daily wage labor. Another key category that we saw was teenagers entering into workforce after their secondary school, typically by the age of 16 or 17, to supplement household income. Another category was women's employment. Women stepped into workforce, especially during uncertainties or severe crisis, going into work in garment factories or caregiving sectors. We also saw migration, internal migration within the country and also overseas migration. Another key category was government welfare. So, poverty alleviation schemes in Sri Lanka, like Samurdhi and Aswesma, provided cash benefits to these households, and this offered critical relief. We also saw informal gifts from families like financial support and groceries. Another factor which most of you know, is sacrifices. We did see sale of assets in some households and also food reduction, especially people opt for less nutritious food. So, apart from these adaptations, we also saw financial inflows coming in that helped or sustained the household during uncertainties. And the first and foremost was savings. Savings was the first line of defense. Almost about 50% of the households used their savings both in banks and in their homes. Another important category was informal loans. We saw 40% of the households use this. Borrowing from relatives came with a lot of flexibility. And also, private lender loans was also significant for quick funds and less documentation. Another noteworthy category was gold loans, which was widely used in this region. Households used their small pieces of gold jewelry to meet emergency expenses, and I'm covering this in the next slide in detail. Apart from that, we also saw Roskas, workplace loans, and also remittances. So the percentage of households that utilize these were very less, but these were very crucial in meeting urgent needs, especially medical emergencies and funerals. And I also want to mention that formal loans were very less accessed in times of uncertainties among these households. So, just to touch upon gold loans emerged as a true lifeline in Sri Lanka among the households we worked with. Nationalized banks and NBFCs offered these gold loans. And when we think of this question, why, here are some of the preferences that we saw. Firstly, minimal documentation. So, gold loan or gold jewelry is a very versatile collateral. So, unlike other loans, institutions require less documentation, and some of these households lacked eligibility documents as well. Another category was quick cash. When the gold is appraised and checked for purity, usually the amount is dispersed within a day or within few hours. So one does not have to wait for 2 to 3 weeks for the loan application to be processed. Another key factor is the lender's risk is minimal, so there is no credit history checks. Also, low interest rates. We observed about 12 to 14% interest rates and flexible loan repayment options as well. And when we further segmented the data to see where did the funds go, which they took from the gold loans, here is the chart. We did see families use these for income diversification, to expand businesses, to improve living conditions, and also a good chunk, 12%, was set aside for liquidity. We did see liquid cash maintained by these households using gold loans. So, having presented this consolidated view, let me also present two diary stories from our research showcasing different vulnerabilities and what does resilience look like in these households. Firstly, about a tea plantation worker. Here you see a chart. This is our daily data cash flow collection. Don't worry about the text. There are a lot of categories mentioned, but let me explain. What you see is her income and her consumption over a short period of time. And we also see financial inflows like loans, and where did the loans go, like house construction. We can see that in the chart. So, what happened in this household? She suffered two devastating shocks in 1 year. Firstly, the death of her husband in early 2023. So she accessed the funds from a local Rosca group. This was a 45 household group, informal savings and lending group, and she managed the funeral cost with the funds from the Rosca. Now she was struck again in a landslide. She lives on a hillside and her house was completely destroyed. So she and her two daughters have to move into a mother in law's house in a small hut in the valley. So it was not only financially but emotionally quite devastating for this household. So for her, her first priority was to rebuild her house. So determined to rebuild, she first took a workplace loan for LKR almost 300,000 to lay the foundation, and the repayments are deducted directly from her wages. So that is not sufficient, of course. So she took two gold loans using her gold jewelry. She also took two informal loans from her close relatives to rebuild her house and to move in. So when we reflect upon this household, Rosca became one of the key safety net, and also family support also was huge psychologically and financially. She had overlapping crises, yet she utilized suitable financial tools like workplace loan and gold loans that she could access at that moment to take a step out of her predicament. So her case is resilience at work, a work at progress, yet it is a long journey for her towards financial stability. So I'll also share one more short narrative of our diarist. In the photograph you see is one of our oldest diarist. She's 62 years old. She's a grandmother and she's a daily wage earner. And what did she face? So she had a daughter who suffered deeply in her marriage. Her son-in-law does not provide for the family, and they also had an 11-year-old child. Now, this grandma's daughter, took a business loan for 150,000 LKR to start a candle making business locally. But she could not generate a sustainable income with this loan, and it became a failed business attempt. So now she's in a position where she has to provide for the house, she has to repay debts, childcare is also there. And in the midst of all these, she decides to migrate overseas. So she uses a gold jewelry again. She takes a gold loan from a local bank to meet the expenses of her travel. Now, did her livelihood change? What change do we see? Um, After a few months, she starts to send foreign remittances. And we also see the grandmother takes care of the finances. The grandma starts to repay both the business loan and the gold loan repayments. We also see equipment Rosca. She enrolls in an equipment Rosca, which is the grandma pays monthly premiums to a local retailer to purchase household goods, both electronic and electrical appliances. We do see TV coming in, other electrical appliances coming in. The household living conditions improve gradually. Another unique feature we see in this household from the records is she starts to save in four different saving schemes. One is a nationalized scheme, and other three local societies. Another important feature which we did not see in other households in the research is the grandchild takes IT classes and English lessons apart from her regular classes. So when we take a step back and reflect on her livelihood, we do see the daughter's marriage and relationship did not go as expected. There is also a failed business attempt. The debt was accumulated. But in the midst of all these things, the gold loan paved the way for migration. And we also see foreign remittances, diversified savings, and also education investments are all key areas of building resilience in this household. So before I close and hand over to Stuart, I want to share these rural low income household livelihoods are extremely vulnerable to shocks, and especially women livelihoods. and they have very limited resources or financial buffer to stand up. Yet, in our research, we find in this region there is preference towards informal borrowing. And also, they do take other formal services, timely and affordable services that helps them or empowers them to work towards resilience. So, with this, I will hand over to Mr. Stewart.
Thank you very much, Mercy. I'm Stuart Rutherford. I'm someone who has spent most of my working life puzzling at the question of how poor people manage their money. Somewhere along the line in the course of that, I developed the research methodology of financial diaries. Right now I've done many financial diaries. Right now I'm doing this 10-year long one in Bangladesh. Now, the situation, Bangladesh is another South Asian country, so much of what Mercy was saying applies to what we are finding in our diaries. But what I'm going to do is just to tell you the story of one of our Bangladesh diaries and then use it to make some reflections on the relationship between resilience and financial inclusion. So I'm going to call her Sakiba, not her real name. Sakiba was a poor but happy rural child who never went to school. At age 11, she began work as a housemaid, and she was humiliated. When she asked for soap to wash her hair, she was told to learn her place in society and to use ash. She did, raising painful blisters on her face. At 16 years of age, she'd had enough of this and ran away to the capital, Dhaka, to work in the home of a woman doctor who befriended and supported her for many years, often giving her money. Bangladesh's clothing industry had just started, and Sakiba eagerly took a regularly paid factory job. But a worker there took a fancy to her and, without her even knowing, persuaded her parents to let him marry her. At his home, she found he was already married, and the co-wife expected her to work as a servant. She fled, and divorce followed. But within a year, she bounced back. A bit older and a bit wiser, she took a job at another clothing factory. This time her luck improved. Through a co-worker, she met a man with a solid job as a private car driver. A Hindu, he changed his religion to hers so that they could marry. The best days of her life followed. 2 daughters were born, and the couple started saving money at home and with a friend. But he suffered a stroke and, partly paralyzed, lost his job. They retreated to her village home, which is in our diary project area, and they used their savings to buy a ramshackle tumble-down home on a tiny piece of land. You can see it in this slide. He looked after the children while she hammered bricks into the pieces used for making concrete, a classic occupation of the very poor. Now, the MFI Grameen Bank had a branch nearby, and Sakiba joined, wanting a safe place to keep gifts from the doctor and their own tiny savings. They decided to use their veranda as a tea stall, and Grameen offered her a loan to buy stock for it. The loan was too big, but she found a neighbor to share it. With 2 girls to bring up, they took more Grameen loans. They also began to realize that they were not good shopkeepers. They gave customers credit, but they were not good at recovering it. The weekly loan repayments to Grameen became hard to find. However, as a local woman, she could get small interest-free loans, known there as howlats, from neighbors. But when the girls reached high school, things got very tight. She borrowed from a second MFI, CSS, then a third, Bureau, and then a fourth, BRAC, and a fifth, Beach. Soon, she was borrowing from one to repay another. By this time, 2015, Sakiba was one of our diarists. She told us she'd been unwise to take so many MFI loans, but, as she said, she had no alternative. I had to keep the shop going. I had to pay school fees. I had to buy medicine for my husband. But 2 further crises came the following year. A daughter had an appendicitis operation, and they paid for it just in time by a desperate last appeal to the neighbours. And then, because they hadn't registered their land properly, someone else claimed it and launched a costly legal case against them. It looked very much as if the future of the girls were in jeopardy when outsiders, including the doctor and our own project, consolidated their MFI debts into a single loan that they are still slowly paying off. Sakiba quit all her MFIs. There had been 7 of them, except for Grameen, where she is still saving in a long-term savings plan. The daughters continued their studies. One is now married. The tea stall is still there, but barely running. Okay, now a few reflections. Science sees resilience as a property of materials, something inherent in them that can't be inserted or removed. I think we should remember that when we use resilience as a metaphor of human behavior. We all have resilience, and we've seen resilient behavior in all 60 of our diarists. Sakiba's natural resilience helped her to fight humiliation when she ran away to Dhaka and to bounce back to Dhaka after hiding from her false marriage. Now, those acts of resilience have nothing to do with finance, but Adam Smith thought that the desire to save is an inherent property of humans. Sakiba started saving as soon as she became a mother and has saved ever since. If you have a trustworthy place to save, saving is safe. It doesn't have the downsides that borrowing does. Sakiba got into trouble with her MFI loans, but never with her savings. And that's a big, important hurrah for savings. Our human resilience may be inherent, but it can be fostered or restrained by our actions or those of others. Using finance to foster resilience has always been a key idea of the financial inclusion movement. Dr. Yunus of the Grameen Bank wanted his bank to overcome poverty by lending. Others wanted to strengthen women by making them the chief financial officers of their households. Others wanted to turn poor people into agents of local economic development. Now, even if Adam Smith was wrong about saving being inherent in humans, I doubt if borrowing is. Oldies like me who watched the early years of microcredit will recall that there was a lot of aversion to borrowing among the poor that had to be overcome by the pioneer MFIs. And borrowing can so easily go awry. Let's look at what went wrong in Sakiba's case. Not because I want to bash MFIs, far from it, but because we can learn a lot when things go wrong. MFIs don't often publicize their problems, so discussion of them is not widely shared, though several MFIs these days are seriously trying to tackle those problems. Okay, so MFI loan officers like lending to shopkeepers. After all, supporting businesses is what MFI loans are supposed to do. And loan officers know very well that many loans aren't used for business. Then shops have stock, which loan officers can think of as informal collateral. They also have daily cash flow. So frequent regular repayments should be easier for shopkeepers than, say, for farmers. Then again, shops are often on the roadside and easily reached and densely packed together, so you can deal with a lot of clients at a time. So then, why did lending to Sakiba lead to such a stressful and unproductive outcome? One clue comes with the very first loan she took, which was too big. Actually, except for when they set up their shop or make changes to it, small-scale shopkeepers don't need big loans because you can't keep large quantities of stock safely on the premises, especially if some are perishable. Of all the shopkeepers among our diarists, the most successful don't take loans at all. They buy tomorrow's stock from today's takings. A more obvious reason for the difficulties is the sheer availability of loans. Sakiba's shop is 8 kilometers from the nearest town, yet 7 MFIs had local offices, all competing for clients. And then MFI loan officers want loan repayments made in a strict, frequent schedule. Their job security and pay depends on it. And they found many ways to exert pressure to ensure this. A short spell of difficulty can cause a borrower to fall behind. At first, Sakiba managed such times with howlats, interest-free loans from neighbors. But in the end, against her better judgment, she took a loan from a second, then a third MFI, and she was on the slippery slope. So the question is, why did her loan officers leave her sliding down the slippery slope? Because if they can collect the repayments and then persuade the client to take another loan, their job is done. They have no incentive to behave differently. When clients try to explain the situation to them, they may see the explanations as excuses. Some of the loan officers are expected to serve up to 1,000 clients a week, but they have little time to explore the details of their clients' lives. We started our diaries precisely to help fill that details gap. Okay, I'll end here, but if you would like to explore the real lives of MFI clients in a lot more detail, do please visit our website or drop us a line. Thank you very much.
All right. Thank you very much, Stuart and Mercy. So we now have about 13 minutes for questions. So we've got a couple of questions in the chat. I think maybe just off the back of your presentations, I'll start us off with one question from me, and then we'll tackle the ones in the chat. The question is, both of you mentioned savings as a way of building resilience for low-income people. What about borrowing? What is the role? Mercy talks about the role of gold loans in helping people overcome challenges. What do both of you think in general is the relationship of borrowing to resilience?
Mercy, why don't you go first?
Okay. All right. Okay, so not only in times of emergencies that we see, we did see in our research with these 100 households, borrowing is very much integral part of their livelihood. If I have to say statistics, during our daily data collection for almost 2.5 years, we did see around 550 loans taken by these roughly around 100 households. And out of it, 75% of these loans were informal loans. So they have a preference towards informal loans. And let me also share maybe quickly my experience with talking to one of the ladies when I visited her home. I see her loan card and I see that exorbitant interest rates that she's paying to the private lender. And I asked this woman, like, why do you prefer borrow money from this private lender? So she told me 3 reasons, which I would like to share here. Firstly, she said, I know this lender for the past 5 years. Whenever I need money, I can ask them. They will give us. So she talked about familiarity and quick access. And number 2, she said, we can't apply to formal institutions because we don't have those eligibility documents. Our loan applications gets rejected. So she is not included, or she is like unserved. That's another category, she said. And the third thing that she said was, my husband is a daily wage earner. He earns every day 4,000 rupees, and I can pay around 750 to 1,000 rupees to the private lender. So her aim is to finish the loan within 2 to 3 months. They take small, manageable credit, and they aim to finish that loan. So this was not in one household. This was in many households whom I spoke to. So borrowing is very much part of the livelihood for their daily consumption or for their business improvements. Yeah, that's the observation from Sri Lanka.
Yes, thanks for asking the question, Sharon, because it gives me a chance to make it clear that I'm not against loans. I may have given that impression somewhat in what I said. Loans, of course, are a resource, and any resource of that power can help to strengthen your resilience. The point I'm making is that they can also go wrong. So that when we talk about the role of loans and resilience, we just simply have to remember there's an upside and a downside. And I think that the financial inclusion industry has been a little bit guilty of talking up the upside and not recognizing enough the downsides. That's why I told this story. That's why I tried to show in detail what went wrong and why it was that well-meaning loan officers left these borrowing clients in extreme difficulties, so that we can all reflect on how we can make the borrowing experience as safe and as productive as the saving experience.
Thank you, Stuart and Mercy. And I think what you said at the end there, Stuart, speaks a little bit to Jayshree's recent question about offering both credit and savings in order to make financial institutions financially sustainable. Okay, we've got a little bit of time to tackle the questions in the chat. So starting from the first question, Magnus asks whether we compensate the financial diarists and share the findings back to them, and how we secure data integrity and safety in the projects. Who would like to go first?
Okay, I'll go first this time. This is actually more difficult than you would perhaps imagine it is. We, in the Shrishipara Diaries experience, we've had several goes at giving the data back to the clients in the belief that this may help them understand more about what they've been doing and therefore perhaps make them better at doing it. But we haven't had much success in getting the format right. But we did an interesting experiment last year, which was to do with regarding the oral world in which many of our diarists live. Most of our diarists, more than half of our diarists, are illiterate. They've not been to school, they can't read and write. So we did an experiment last year along with a very interesting organization called My Oral Village, which Gojo was also involved in, which looked at the question of to what extent can we help diarists themselves who are illiterate keep their own records. I won't go into the details, it's a long and interesting story, but what I came to understand at the end of it is that rather than looking for ways of feeding the data back to the diarists, it might be more productive for the diarists if we can help them learn to keep their own notes, to keep their own records, keep their own running records of what their financial lives are like and what they can learn from it.
All right, thank you, Stuart. So let me also answer from Sri Lanka Financial Diaries. There are a couple of questions here. So firstly, I want to touch upon the methodology. So that will answer the question directly. So the methodology that we followed was all these households self-recorded their daily cash flow, their diverse income, their expenditure, their financial inflows and outflows. So all the data are provided by the household to us. That's number one. And secondly, for the question, do you compensate them? Yes, we do compensate We do give a monthly gift to them for the data that they provide. And then how do you share the findings back to the community? So we do during our field visits, this is something that we practiced. So we uh, plot them in a graph and we showed them, like, for a period of 6 months, how much was their income, how much was their expenditure, how much over or under deficit they went. So when we have a field visit, we kind of distributed these to the community to see them where they are. Another aspect is they are able to self record the data, so they are able to see their own expenditure and learn where they are at based on their spending behavior. That's another aspect. So I hope I answered the questions. Another important aspect that comes in Sri Lanka is their literacy rate. Out of the 100 households, almost 73% of the households had secondary school education. So they could record the data by themselves. That was a huge advantage in Sri Lanka.
Thank you. Next, we've got a question from Jayshree about the gold loans. So Mercy, I don't know if you'd like to answer this one, as I know you've looked into the gold loans a lot. It's specifically about the loan to value ratio.
Yeah, thank you, Jayashree, for the question. As you're from India, so you're very much familiar with these. Yeah, it's almost the same what we practice in India and in Sri Lanka. And I also think in Pakistan and other regions, it is not fully, or I should say, put it in words like it's based on the policies, what each of the institutions offer. So based on that, it is not generally the 100% of the pawn gold value, but mostly they get, and the households are pretty happy with it. And to be very specific, it is not. It is generally around 70 to 80% that what they get from the gold that is being appraised. Yeah, I hope I answered your question.
Great, thank you very much. I think, Stuart, you spoke a little bit to Jayshree's next question about the about offering credit and savings. I don't know if you want to say any more about that, because when I saw the question, one example that came to mind was SafeSave, what SafeSave is doing in Dhaka and how they are lending from their savings to create a financially sustainable model. I don't know if you want to talk about that.
Yes. The reason why I developed the financial diaries methodology in the first place was because I was living in Bangladesh and I had developed my own critique of the MFIs and what they were doing in Bangladesh. I was a great admirer of them, but I had considerable reservations about the theoretical basis of what they were doing. And I wanted to see if there was a way of offering financial services to very poor people which didn't have these downside effects that I described in the little story I gave about Sakiba. So we came up in Dhaka. We started a little institution called SafeSave, which deliberately gave extremely flexible loans, as well as focusing on savings just as much as it focused on loans. So when I talk about extremely flexible loans, they didn't have any fixed repayment schedule. They didn't have any fixed repayment term. You took the loan, you repaid it whenever you could, and you took as long as you liked. But you had to pay your interest on the loan each month. And we had some success with that. And I would like to link that to what we're observing now in the Rishipara Diaries, which is the most favorite form of borrowing of our Rishipara Diaries are what they call locally howlats, interest-free loans. And basically, these are a way of tapping into community-owned or family network-owned savings. So if I want to start a business as a poor person in our area, I'm much better off if I have contacts in my community or contacts with my wider family that allow me to take a howlat than taking a loan from a microfinance institution. If I take it from a finance institution, I have to obey these very rigid rules about repayment regularity. Very, very heavy discipline. If I take one of these howlats, I only get a howlat if it's recognized on both sides, my side and the person who's giving me the money, that this is something that is beneficial to both of us. That is why somebody in my set, in my family set, in my community set, will be willing to lend to me because they can see that this is something of benefit to both me and to them and their community. And so that is what we had been doing in Save and are still doing in Save in Dhaka, turns out to be really rather similar to this very important tradition in Bangladesh of borrowing interest-free from neighbors, family, and the wider community. And it is a very flexible and very much appreciated and very powerful way of using the savings capacity of a community or a family network.
Great. Thank you both so much. We are 1 minute over, so we have to wrap up the session now. I'm really sorry that we couldn't get to all the questions. Mercy, if you could put up the last slide. So what we shared today was just a very small selection of stories from the Sri Lanka and Hrishipara Financial Diaries. So if you are interested in learning more about the Financial Diaries, please do visit the Gojo Financial Diaries and Hrishipara Diaries websites. And if you are inspired or interested in setting up your own Financial Diaries project, we are actually starting to offer kind of advisory or consulting services in this area. So do feel free to get in touch with us about collaborating or visit our website to learn more about the diaries. Thanks very much for joining.